Hello, good morning, everyone. hello. Welcome back, folks. Good to see a few of you on early already. Alex is back as well. Morning, Alex. Yeah, we had a public holiday. There's a bit public holidays, wasn't there? Friday, Monday. A little bit of sport on the weekend. Hopefully your team got up. My teams didn't. It's still a bit heartbreaking. Still a bit heartbroken from the weekend sport. There you go. Good morning to you, Alex. Morning, Tim. Hope you're well. You're nice, Tim. Nice. All right, folks. Good to see you while everything's warming up and things are getting going. Maybe people have still got a bit of a long weekend going on out there in the world of working. Maybe. Who knows? I'll do the quick intros. Jason Witten's my name. Most of you know that already. And if you don't, if you're new and you're popping by and you're finding us for the first time, welcome along. This is where we hang out in the mornings and have a conversation around about 10 past 8 each day. Well, each working day anyway. Where we try and dive into the data, the info, the information that's floating around out there in the world of property investing and see if we can't make a little bit of sense of it. I've been property investing over 20 years, coaching property investors, maybe just like you or beginning property investors, advanced property investors, depending on where you're at, what you're doing, for well over 20 years as well. And along the way, been able to help many of my clients purchase a bunch of properties. At the moment, just over 10,000 properties they own. And, we've learned a couple of things, folks, along the way. So each morning, get to share a little bit of that with you. So that's the gist. That's the drill. And thought we might hang out this morning and talk about the world of making a gain or making a loss. Right now in the world of the media, a little bit of media out there about the market, as there always is. There's something going on. The September released pain and gain report from RP Data, folks, RP Data, which is always interesting. And it's showing, the statistics are showing, and, it's interesting, these ones, statistics are very broad. However, it's always interesting to analyze and have a little look at what is going on in a report. Thank you, RP Data, for the report about the pain and gain report. What's happening out there in the world of property investing? And the report is saying, hey, loss-making short hold listings surge across Melbourne and Sydney, and losses have ballooned. Ballooned. Anyway, they get a bit dramatic, don't they, sometimes when they report and talk about these things, but losses. Why do property investors sell at a loss? Always confounds me. Often if you sell at a loss means you've got more money. You've got money to burn, basically, which means often you weren't really committed in the first place. It's an interesting conversation, this one, about selling for a loss, because unless you're really forced to, my style, my opinion is you shouldn't be selling your properties, and often you have to sell the best ones in the worst times to get out of a problem. But anyway, let's review. Let's have a bit of a conversation. Let's look at what's going on right now and maybe have a look at a little bit of data and talk about this conversation, because at the end of the day, there's a few things that happen that all of us might need to sort of make sure we just check in on when it comes to this thing. Because, hey, the market has gained, we had a little dip, the general market, but the general property market, folks, has had a pretty significant gain since, since 2020. And in median value, we're up, many trillions of dollars. And the property market is worth, the residential property market is cracked at, approximately $10 trillion. Now that, according to certain data, certain info, that's 11 million properties. And all of you know, well, if you've been listening, if you've been tuning in regularly to the morning show, that Australian residential real estate is in a severe undersupply. We've got a massive amount of people moving into the country. There's not enough properties to rent or buy, et cetera, et cetera. So my call is to see that continuing to go up and probably kick up pretty nicely when interest rates go down in sort of 24, 25, all right? And they might even come down sooner. Who knows? But what we do know is if money gets cheaper and people pay more for property, that's just what happens. So let's have a look at this info. Let's dive in and have a look at what is the conversation in and around loss making, properties making a loss. Now, why? And the challenge is for many property investors or beginning property investors, they don't understand the in and out cost, the transactional costs of real estate. Now, if you pay a fair market price, now, if you can get a good discount or you can get a good bargain on a property, go for it. Knock your socks off. Love it. I don't subscribe to the hang around forever to get a bargain, type of arrangement. My attitude is get on with buying a good piece of real estate and keep it for a long time. But let's talk about the in and out costs, folks. If you're there, get your thumbs ready, put it in the chat. When we buy a property, let's talk about the costs in and out, because really at the end of the day, short selling, which is this article here, what's it saying? Loss making short hold listing surge, right? Which means, hey, holding your property for a short period of time and then selling it for a loss. Well, no shit, Dick Tracy. Buying and selling property. Property is not a share, folks. It doesn't trade like the shares. It's different. So let's talk about that this morning, and we'll have a look at some RP data in a second. So let's talk about the cost of things when you buy, and the cost of things when you sell. All right. And it's interesting one, isn't it, Jeff? Like, what is a profit, folks? What is a profit? What's the profit? What's the return you're looking for? So let's talk about that. Up front, ladies and gents, talk to me. Put it in the chat. What are the costs up front when you buy? When you purchase a property, what are the costs when it comes to purchasing? The biggest cost to buy to buy a property over and above its value. Yep. Over and above its value is stamp duty, right? And we all think this is ridiculous. I think it's ridiculous. It's still, I think stamp duty is a scam, and but it's the way we have to transact. And yes, you've got other ones. Okay, you've got legals, you got disbursements, and sometimes lenders mortgage insurance. Now, yep, exactly, Chris, LMI, and there might be a few other bibs and bobs in there, but really they're the major costs. So stamp duty. Now, all of those can add up, folks. Just a regular property. These top ones, that could be easily 20 to 30K, right? 20 to 30K. Now, that's a pretty chunky piece of return. Let's say you buy a property for, $500,000. I mean, be a pretty cheap property these days. But let's say you buy a property for 500K, that property's got to gain, at least a couple of percent, 2 or 3% pretty quickly before you get anywhere, right? Now, the holding costs of that, you might have some some other expenses along the way to set the property up, et cetera, et cetera. You might have to, disbursement is rates and land tax and blah, blah, blah. But again, let's talk about, all right, we hold that property for a small period of time, let's say 1 or 2 or 3 years, and then we sell it. Now, what are the costs of selling a property, folks? Put that in the chat, because let's say you go and try and sell your property in a market today. No one sells it for free. There are some agents out there who'll charge you like, $2 to sell it. But the majority of agents, yeah. So on the way in, you got stamp duty. And let's see if you do make a gain, Chris. Yeah, exactly. So you got an agent's fees. Again, you've got legals. Okay, legals as well. If you do make a gain, you got to pay capital gains tax, and then there might be some adjustments and disbursements as well. All right. Now, anytime you try and transact a property in a short period of time, the cost of these, the weight of these, again over here, this is kind of 20 to 30K again of costs, and over here, often, if you've got it like holding costs, interest. Let's say you make the property vacant because you want to sell it. Interest as well. A lot of people say, all right, well, should I make the property vacant and present it well? And well, the answer is yes. If you do want to present the property well, often having the tenant vacate it, stage the thing, make it look good. If you do want to sell a property, that's pretty important, but that might take you, 2 to 4 weeks, maybe 6 weeks to 8 weeks, a couple of months of, interest and holding costs. So when you have a look at this, so if you think about it, this could be 50 to 60K, right? 50 to 60K. Now, if you bought a $500,000 property, it would have to rise in value 10% for it to go up, even to cover the cost, right? To cover it, folks, right? So, and how long does that take? 2 to 3 years, maybe 3 to 5. Like what does it take? So you can see very easily the cost of in and out of owning a property is it's a bad idea. It's a bad idea. 100% bad idea. If you think, I'll buy a property and sell it to make a profit in the short, under 10 years, if you're thinking that, then stop thinking it. Right? You might get lucky. You just might get lucky. It might go your way. And I hope it does if that's the case. But property, real estate, residential real estate is not a fast trading commodity. It doesn't go up and down fast. I mean, the last few years it was quite unique, folks, when it came to the marketplace and some, the lowest interest rates in history and so on, and a supply issue that that arrived at the wrong time or the right time, depending on how you look at it, right? So for me, for you folks, this stuff, think about this as we go along. The time frame for ownership of property, you guys have heard me say this 1,000 times, right? Right? You've got a minimum 15 to 20 years, all right? You own your property, it chugs away, and then at some point the value goes up. Your mortgage might be a little bit more at the beginning, and then your mortgage would go down, especially if you do the 5 years interest only, then 25 years principal interest. If it can pay itself off, awesome. And then what we want is our income on our property to go up as well. We want the income to be covering its costs, and then the rents go up as well. So this gap in here, this opportunity in here, this is where our wealth is over time. And it takes time, folks. It takes time. That the money, the gain, the value is usually in the last 1/3, right? The first 2/3 are the hard yakka, right? The hard yakka. The first third often, which is that first 5 to 7 years, is where the hardest part is. And especially, let's say, if you bought an investment property in recent times, which was, low interest rates, and the interest rates have gone up pretty significantly, and you're thinking, holy shit, this is a bit of a stress or a strain or a challenge. And then what happens is, if you get stuck, if you get caught, then you sell that property and you take whatever you can get because you're locked in, you're dovetailed in there, and you can't not sell the property, and so on, right? So what's the solution to this? Well, the solution to this is obviously buy a property that you're happy to hunker down and keep forever, and also run buffers and manage your cash flow as best you can. Now, it's never perfect, folks. That's why we encourage you to get coaches and check in with your coaches. You know what happens often, though? And, this is the thing. People will invest in coaches and advisors, and when there's tough times, when you go like, oh, shit, I think I'm out of my depth here, they go quiet. They don't even go and see their coaches, and they sell, sometimes out of embarrassment, sometimes out of fear, sometimes out of whatever. Listen, folks, reach out. If you've got advisors and coaches and you're in a pickle, reach out. Get it. Talk to your team. That's what they're there for. All right. Little encouragement right there. But anyway, let's have a quick look. You can download this pains and gains report from RP Data, but it's an interesting one. Check out this, of recent times, but this is interesting. This is good. Of recent times, median gain, 290, median loss, 39,000. We just did those numbers before, right? When you sell too early, then those numbers are around about 40 to 50K, right? As we go along. And there's a bit of other data in here that's worth having a look at, folks. But the national overview is pretty good in reality. The national rate of profit-making sales, still pretty good in the 90s. And the national rate of loss-making sales, in the smaller tens around here. So when you see the media, I love this stuff. Like when you see the media, check this out. And when you see the media, the share of short-held listings selling at a loss ballooned, folks. Did it balloon? Did it really? Come on now. Did it balloon? Let's have a look. It's not ballooning by any stretch of the imagination, as far as I can see. So we shall see. Right? I wouldn't call those small movements balloons, would you? Yeah. Anyway, they like to ham it up. What's the point of today's conversation? A little bit of media out there, but the takeaway, I think, for hopefully that we all really appreciate, understand, and we get is that owning real estate is slow and steady, medium to long term. It's not short. Don't be a good time Charlie. I call them good time Charlies. They come along, they buy a property, and at the first sign of anything not going perfectly, they run away, going, the sky is falling. And then, then what happens is they want to blame someone else for all their silliness. So, at the end of the day, it's not easy, but it is straightforward. It's not easy. I get it. I'm with you. You'd buy a good property that you're happy to own for a long time, hunker down and bloody keep it, right? Do whatever it takes to keep the damn property. We've had clients sell cars, move in with mum and dad to keep their portfolio going. What's the priority? Is the priority to build it, and it only go perfectly, or is it, hey, just hunker down and make it happen, whatever it takes? That's your decision, up to you. But if you buy and sell a property in a short period of time, most people make losses, unfortunately. There you go. All right, folks, that's it. Done and dusted. Tonight, if you're listening in and you're in our mentoring and coaching program, make sure you register and come along tonight. We're doing the four migrations of money. There is a time where your money will need to migrate from one asset to another. Most people think, okay, I've got to sell it. But Andy Fenton calling me. There's Fenton. Fenton, what are you doing? Anyway, come along tonight, folks. I'm going to cover the 4 migration theories where you, as an investor, migrate your money into other places, spaces, assets, etc. We're going to dive deep into that tonight for mentoring. Anyway, Wealth Coffee Chat done and dusted. Fenton's calling me, so I better answer the phone. All right, folks. That's it. Wealth Coffee Chat done and dusted. You guys take care. Thanks for joining, and join me tomorrow. Tomorrow, I think we have another one. Let's do it again. As always, give us a shout in the chat if there's something you want me to cover. Thanks, folks. Good to see you. Bye for now.